Welcome back. You're watching Startup Central with me, Nantara Rai. This is the only show of its kind dedicated to startups, innovation, technology, disruption, and innovation. Speaking of innovation, market regulator SEBI has come out with a framework for Sandbox Innovation. I'll simplify it for you. What basically SEBI is looking to do and what even startups want is some kind of an access where fintech startups can test their apps, can test their applications in the beta mode before they actually go live. There's a framework that had come out. That framework has been revised a little bit as far as eligibility goes on what kind of startups would get access the market regulator would allow. The question today we want to ask is, what is a reasonable access? What can the market regulator do to make sure that the fintech startups continue to do as well as they're doing, if not, of course, much better? And we thought, who better than Nikhil Kamath of Zerodha to pose all of these questions to? He gets markets, he became a unicorn during the pandemic. You've only seen the numbers go up and up. So Nikhil, welcome to the show. It's always a pleasure talking to you. Tell me something. If you had been allowed the kind of access that market regulator SEBI is talking about now or thinking about, pondering over, what would have it meant for Zerodha? If you were to go back in time, what would have it meant?
Hi, Nantara. It does help. I think we are seeing some companies that we are associated with taking advantage of the sandbox today. But the problem at the core that SEBI is trying to solve is the one with really low participation in India. With all the talk about stock markets and financial inclusion, we still only have about 2% of the country, and 2% optimistically speaking, which has either direct or indirect access to the financial markets. That number in the West, for example, is, in America is about 90%. So this is a great step towards allowing access. And I think to give credit where it is due, a lot of what SEBI has done over the last couple of years, I think they've been spot on, even in terms of how they've handled the volatility with the pandemic. And the sandbox seems to be a step in the right direction.
So what can it do? How critical is it?
Well, I think it will allow for you to access, testing facilities and test data that could be provided by organizations like stock exchanges, depositories, or QRTAs. People can test what their idea is, entities that are not yet regulated by the SEBI in a demo atmosphere of sorts. So it does help people who are building fintech products. I think it helps their process of going to market. So by virtue of that, I think it will be quite useful.
Now, there's a framework that had come out, which has now been revised as far as eligibility goes. Is it easy? Is it become more difficult? Where does it stand at the moment?
I think it has become easier. I mean, the thing which came out today was how they have made it slightly easier for people to enter the sandbox. I think especially the eligibility criteria one, it really simplifies how someone can enter and use this ecosystem to test product.
But supposing it does take time. Now, things sometimes do take time. Now, if this does take time to roll out for fintechs to get the kind of access they want to test their apps before going live, is it going to be a really bad thing, very, very detrimental for the ecosystem? Or is it something the ecosystem has learned to live with, to roll out its applications, to roll out its business models without having that kind of access?
The ecosystem will survive either way. I think we have very many innovative entrepreneurs in the fintech ecosystem today. But this, I think, is like a aid. It will help along the way. So net-net, it is a positive. People can choose to either utilize it or not, but it is definitely a positive.
Ask you one question, Nikhil. I have you here at a time when the stock markets are, of course, at lifetime highs. You got the Sensex back above 50,000, all of that. Monday was Union Budget Day, right? Best performing day for the markets on a budget day. Sensex up 2,200 points, up 5%. How was it at Zerodha, budget day?
Well, it was fairly seamless for us, actually. We had spent in some time trying to, make sure we're able to handle the increased utilization which will come by. And luckily, nothing happened and everything worked perfectly. We had no downtime or anything like that. Outside of us as a broker, I think the way the markets are rallying is worrying. We are in expensive territory today. If you were to look at the multiples that the market is trading on today, I think if you compare it to any time in our past, it's definitely lofty territory. So people have to be careful. New investors coming into the market have to ensure, they don't lever, they don't fixate upon one company and have ample diversification in place. But I think to retail investors out there, if there is a lot of profit that is sitting on the table and you have an opportunity to take out some of the profit, it's probably an opportune time today.
So, Nikhil, we've always said historically, it's when, the conversations with your auto drivers, the panwalas, all of that starts happening around the stock market is a time when you know that it's going to sell off at any time. But that hasn't happened this time around. But, you're raising a valid point as far as valuations go. Is there enough awareness for retail investors, etc.? And isn't that something else that fintech firms need to do, especially, something that the market regulator could also look at maybe linking with the Sandbox?
Yeah, totally. I mean, Nahantara, I think that auto driver moment kind of like passed a few months ago, like maybe like November, December, I knew of, like somebody who is a staff of ours who had never even flirted with the idea of stock market. I watched him recommend a stock to somebody. These are definitely cautionary tales. We have watched this happen in the past, and we have all lived through the repercussions, which have not been nice when we entered this bubble territory and, everything was going up, good news, bad news, whatever. But I think the problem with the markets this time around is there is still a fair amount of skepticism in the market too. There are a lot of people who are sitting on the sidelines and have missed this rally. Maybe market has a way of knowing things about the future, but typically all of this skepticism has to go away before the markets correct in a significant manner.
Before I let you go, the story of the year, maybe the story of the decade, GameStop. I know you wrote a column on it as well, and now look at the way it has been swinging so wildly. What's the biggest lesson from that?
Well, I get that people want to make a point. I understand I understand and relate to the David versus Goliath thing. But you can't be buying companies which don't have anything going for them fundamentally. If Reddit, people on that Reddit thread were doing what they're doing to GameStop and say silver, which they're doing now, for example, I think is a lot more valid because that could be considered as a alternative for how distrusting they are of fiat currencies or the dollar, for example, because American government has been printing so much of it. So I think pick a stock, pick an asset class with some kind of fundamentals behind it, because at the end of a really long short squeeze, depending on how many shorts they are in that particular asset class, at the end of that entire chain, you don't want to be sitting with the paper of a company which is essentially not doing anything or has no hope of ever throwing a reasonable balance sheet out. So it is risky. I think people should be aware that it is their money that they're investing in companies like GameStop, and all the others that were pushed up by the Reddit crowd. And stay cautious in companies like this. Anything which is moving up 100% and coming down 50% every 2-3 days, I think is essentially uninvestable for a normal person. I don't know how you can catch that kind of volatility, but probably to stay cautious and stay away from stuff like that is a better thing to do.
I'd like to thank you for being a part of Startup Central today. I always enjoy these conversations. We'll have you back on the show very soon, I'm sure. With that, ladies and gentlemen, we're going to take a short commercial break. Coming up on the other side, it's a manufacturing startup with the Make in India mission, which has raised $120 million from a clutch of marquee investors, including Lightspeed. It's Zetwork, and the founder will be live on the other side. Stay tuned.